Okay, joining us right now with more on this, Bill Rudin, the CEO and co-chairman of Rudin Management Company and former chairman of the Real Estate Roundtable. Bill, it's great to see you. I also want to get you in on that conversation we just had about New York, which I think is unto itself a fascination. But what do you think of what Barry said, and how concerned are you about not just these real estate books, but really the regional bank sector at this moment?
Well, first of all, great to be back in studio with all of you,
nice to see you.
Old friends. I think Barry's spot on. There are definitely significant storm clouds ahead. That's why the Real Estate Roundtable sent a letter a couple of weeks ago. I think you had Scott Reckler on right. To the Fed, to the Office of Comptroller of the Currency, to other banking regulators to talk about what we see coming forward. There's a $1.4 trillion of debt coming due over the next 3 years. And what's the best way to realize that there's a credit crunch going on right now? Their lenders are not, banks are not lending. The regional banks definitely not lending. And how do we work our way through what we know is going to be right. issues as some of these loans come due? You though,
I mean, underlying this is the issue of office and vacancy in office, especially not necessarily among A-class buildings, but B and C-class buildings. Clearly, we've had conversations about what happens to cities and what happens to the real estate, the commercial real estate office space in those cities. You've been very bullish over the past couple of years, but here we are at a moment where I think people are now looking and saying, actually, this may be a little bit tougher, or maybe a lot of it tougher.
No, there's no question about it. There's this bifurcation of quality, people going to the better buildings. Our building across the street, right behind right. you, we rented to a major university, Touro College. They have 2,000 people in that building now, 300,000 feet. So it's incumbent upon cities, and that leads to sort of the conversation you just had, is to continue to diversify its tenant base, healthcare, bioscience, biomed, media, entertainment. Right. Some of these companies are growing. Right. We see companies expanding, but there is definitely significant vacancy in the B and C, and that's why Senator Gianaris and his caucus and the governor and the mayor are talking about conversions, allowing office buildings to be converted to residential. That's not going to be a silver bullet, but that adds to the vibrancy of cities. It takes inventory off. We did it in Lower Manhattan in the
right.
in the mid 90s. We went from 10,000 right. people living in Lower Manhattan to 70,000.
As a real estate guy who cares desperately about the city, how do you balance the issue that Senator Gianaris is trying to, which is to say, this city needs revenue. There's no question this city needs real revenue to provide the services that your customers and residents and clients need, at the same time that you want to keep people here. So in some ways, you want lower taxes, right? Because
no question.
That would make it more attractive to be here. But you also desperately need higher revenue.
Yeah.
How do you do both?
You have to. And the mayor announced the other day budget cuts because of the immigration hit on the servicing those immigrants coming. That's a federal issue. That shouldn't be a New York issue. We shouldn't have that burden 100%. And a state issue. You have to balance your budgets. You have to make hard decisions like we do in business and make sure that you have.
But what are you going to cut? Because in the short term, you will have to cut to make the numbers work.
In any business and any government, there's fat in there. You have to look at each line item and come up with a plan to
in a city controlled by unions. How do you do it?
It's not easy. It's a very difficult thing. You have a mayor who understands it, who's taken aggressive actions. These are all tough decisions.